On deck is a big week for your money. We have tech earnings from Meta, Microsoft, Apple, and Amazon. That will be in focus on Wednesday. The Federal Reserve announces its interest rate move on Wednesday as well. And the president continues to push Fed Chair Powell for a rate cut. Friday is also the trade deadline as well as the jobs report, so plenty coming up and plenty for investors to digest. Here to tackle all these topics, let's bring in our panel. Jeff Kilburg is with us. He's the president and CEO of KKM Financial and a CNBC contributor. Steve Kovach and MacKenzie Sigalos are covering the tech trades as well. Welcome aboard, everyone. We really appreciate it. Jeff, kick us off. What do you think is going to be the most significant?
I think Apple is going to be really important for sentiment. We've seen the Mag 7, kind of a bifurcated week, Kelly. We saw Tesla really disappoint in earnings. Then we saw Google really deliver. So I think that Mag 7 theme, which really has been the backbone of this V-shaped recovery since the liberation lows, I think we're going to see Apple. We really need something out of Apple from the AI front, but I think we're going to focus on that. The Fed, I think we know what the Fed is going to do. They're going to be prudent more. But I'm looking for Apple to really be that bellwether of earnings next season as we continue to heat up with new all-time highs.
All right. So on that note, Steve, what would you say about Apple and what would you add?
Yeah, on the AI front, look, Apple made it clear last month at WWDC they're kind of taking the year off to fix their AI problems. However, there's this discussion now about acquisitions and whether or not they need to buy a company like Perplexity, or do they need to go out there and match Mark Zuckerberg dollar for dollar and acquire all this big talent. I think that is the best AI hint we'll possibly get out there. I will also say, just adding on to what Jeff was saying, is that there's a lot of optimism baked into this report. I've been reading the analysts leading up to next week's earnings, and there's a lot of thought now that they could look deceptively better than they actually are, just because there's a lot of front loading of buying iPhones ahead of the tariffs. We do know there's going to be that $900 million charge because of tariffs. And then the question becomes, what does that look like through the rest of the year? I said this on your show just a few minutes ago, Kelly. This is happening the day before that August 1st deadline. So I don't even know if Apple knows what to expect.
But 900 million, not 900 billion.
900 million, which Apple can afford.
I was just saying, it's like now, a couple hours of revenue.
Right, exactly.
Let's be honest, that's a lot of money to us.
If it was 900 billion, we'd be having a very different discussion about Apple.
Conversation.
Yeah.
We're all doomed. MacKenzie, I think we've got all the time zones except for the beleaguered mountain time zone covered here. MacKenzie Sigalos out west. We got Amazon, we got Meta. What's kind of the theme from those companies and more?
Well, with Amazon, it's in the middle of that Mag 7 pack, up about 5.5% this year, which is just ahead of Alphabet and Apple, but it's still very much underperforming the NASDAQ and S&P. So what we're looking at, what investors want to see, is that they're reigniting their AWS growth, because cloud is still one of Amazon's core businesses, and revenue growth missed estimates last quarter. It slowed down from Q4. So going into next week's results, analysts want to see AWS at least hit that 17% growth target. And most firms do see a clear path to acceleration in the second half of the year, driven by Gen AI workloads and easing GPU constraints. But that's really key, that the street starts to see Amazon hit that inflection point.
All right. So should we, Jeff, then talk kind of more broadly about some of the macro events that await us as well? The jobs report, the estimates are all over the place. The Fed's supposed to make its move on Wednesday before, I guess, knowing what is going to happen on that front.
Well, I think the CME Fed Watch tool is illuminating, Kelly, that we are going to see the Fed potentially cut rates, 65% chance in September. They're going to sit on their hands next week, talk about prudence, still looking for trade deal, tariff, or inflation from trade tariffs to materialize. We still are waiting for some of these trade tariff deals to land. So I think when you talk about the Mag 7, the overall picture, the Mag 7 continues to lead us up. Is it a little bit vulnerable for a pullback? Absolutely, when you see the representation. But if I look at Apple, and I know Steve brought up a great point, Tim Cook's leadership, people are questioning his leadership. I think he's actually being very measured, very calculated. He's not a hyperscaler. He doesn't need to spend all of their $150 billion in cash. They could buy Perplexity for, $14, $15 billion. It'd be a small acquisition for them, one of their biggest ever. But nonetheless, we have seen Apple be the laggard in the Mag 7 next to Tesla. I'm not counting Tesla here. It's the top detractor in the S&P 500 year date. But going back the last 5 years, it's the third largest contributor to the S&P 500. So let's not forget how much Apple has been important. It was the first $3 trillion market cap company ever. I know NVIDIA is $1 trillion more, and I'm using the word trillion very liberally here. But nonetheless, I think Apple sets the tone. Tim Cook has an opportunity to prove his leadership, to prove the ability that they can acquire something or build something, because we all want Siri to be better. No doubt about it. If you're an Android user, we'll leave you to the side, but I am in the ecosystem. I have no intention of leaving the Apple ecosystem, and I need Siri to be better. But if it's not, I'm just going to use Perplexity or SuperGrok or some other app out there. So it's not a death sentence if they don't deliver, but investors really want to see Apple deliver, and they need to.